Hello there, this is James and you're watching Tixee Live. In today's program, we've got a fair bit to cover. We've got to do a bit of a recap of the story we were talking about this morning in relation to oil, because oil seems to be very much on the market's mind. And then something else as well, which oil is help driving the fear of. So we'll have a little chat about that and ask the question, is the market being too afraid of the dreaded I word, i.e. inflation? But anyway, before we get into that, don't forget, these little episodes are for educational purposes only, and in no way whatsoever should ever be treated as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So those of you who were kind enough to join me this morning during the European session, we all know that oil was very much in the headlines, and nothing has really changed since then, because it really is the talk of the market. As you know, those who join me, that the EU agreed to block 90% of Russian oil imports. These are oil delivered by the sea, not the pipeline, not oil pipeline. That one they've decided not to be part of this deal because they needed to keep Hungary on board, because Hungary is incredibly reliant on oil coming from Russia through the pipeline. But that's still 90% of Russian oil imports. So of course, because of this, oil prices are again taking the headlines, and we'll have a look at oil again in a minute on my chart. But now the talk of the town is, or the talk of the market, what the market's debating is whether or not we could see WTI and Brent reach the levels they reached back in March. Okay, back in March, WTI was trading above $126 per barrel, whereas Brent was trading above $130 per barrel. Okay, now this is the last day of May. Okay, we're about to start June, but in May, Brent has gone up in value by 9%, and WTI has gone up by 13%. Okay, so the talk of the markets and the debate of the markets, because of what the EU has done, what they've agreed to do today, is can oil get back to those levels they saw back in March? Now let's pull oil up on my chart and let's have a quick look at it, how they're currently performing at the moment. Currently, WTI is trading around $117 a barrel. Okay, $117 a barrel and 92 cents. Whereas Brent, we have a look at Brent. Brent is currently trading at $119 and 37 cents. So they're both currently a little bit below the highs they experienced back in March. By the way, for Brent, that was like a 14-year high. But they're both a little bit below the $130 mark, which Brent reached, and $126 that WTI reached. But the question is seriously being asked, because of most recent things with the EU's decision, can oil go there again? Okay, now if we have a look at Brent again, okay, yeah, it's trading under the $200 moving average. We all know it's experienced a bull run at the moment. We have a look at the RSI, okay, and you know the rules with the RSI. If the RSI is above 70, it's potentially overbought. If it's below 30, then it's potentially oversold. When it's overbought, the market could sell off again. If it's oversold, the market could start buying again, pushing prices up. but as it stands, the RSI is trading just below the 70 mark. If we bring back a WTI again to that as well, have a look at the WTI. Okay, this is on a 1 hour chart, of course. Again, we're above the 200-day moving average, and the RSI is just below the 70 mark, so not essentially indicating that it's overbought. If we do a slightly longer time frame, maybe look at 4 hours. 4 hours is just above the 70, so indicating it could potentially be overbought. But the momentum currently is with oil. Like I said, they're ending May, unless something really drastic happens, because we've still got the US session to go. WTI is up 13% this month, and Brent's 9%. Now, the question I have to ask, of course, because obviously, you know, oil has got the headlines today, and there is talk that, you know, could we see those levels it hit in March? The only couple of questions I have, which might put a damper on the oil bulls slightly, is two things. One, is it already priced in that EU was going to make this decision? Is it priced into the market already? Okay, because don't forget, this was discussed, you know, having the EU, you know, cut off or stop 90% of oil use from Russia, or buying oil imports from Russia by the end of 2022 was already mentioned several weeks ago. It was first mentioned and brought up. Okay, it's only like today or late last night or early this morning, 1 o'clock, 2 o'clock in the morning, whatever, that they finally agreed to do a deal about this. So is it already priced in? So the market already expects that this was going to happen. It was only Hungary which was sort of holding things up slightly, but is it priced in? That's one question I have to ask. The other question is, China is beginning to come out of its lockdown, because obviously it's been locked down for quite a while now, because it had a second case or second, you know, explosion of COVID. So they locked down very severely, but they're beginning to come down. So obviously if they're coming out, demand's going to increase even further. And then you say, all right, okay, so then we've got a supply issue. So doesn't that fight that, you know, that thing? Isn't that question? You know what I mean? So that is the question, isn't it? So especially bear in mind that China looks like it's trying to arrange a deal with Russia to get their oil. So obviously, if Russia can't sell it to EU, they might be able to sell it to China. So there we go. So those are the two questions I have to ask. But as it stands at this very moment in time, oil. Sorry, I'm a gold bug. I talk about gold all the time. Yeah, you know, though it's extremely bullish, will it get to those levels in March, or is it priced in, or haven't we not taken into account that China's coming from lockdown as well? The other thing coming up for oil is due on June the 2nd, which is the OPEC meeting. Now, we're not expecting any big surprises for them from this meeting, because, you know, though many Western countries have asked OPEC to increase supply to help with the burden of prices, it's pretty much what everybody expects is that the market, that OPEC will carry on with its supply amount, what was agreed June last year. So we're not expecting any surprises, but still, we'll have a look at it all the same. You never know. They might surprise us. So anyway, June the 2nd, OPEC, okay, which is obviously the Organization of Petroleum Exporting Countries. It'd be definitely worth seeing what those meetings bring ahead. I don't know whether or not it's a great big surprise, but certainly worth checking out. There's the other thing about oil today, okay? Not just the question in the market is being asked, can we go back to the levels we saw in March? But again, with high oil prices, the fear of inflation has reared its head again. Okay, so inflation is now a big issue because we got such high oil prices. Clearly, that's going to affect inflation as well. And so that started to come about again. And today, as I mentioned this morning, the Eurozone, HICP, which is like the consumer price index, which is what the UK and the US does, measures inflation. That was announced at 8.1% versus 7.7% expected. So higher than anticipated, a lot higher than anticipated. And we'll have a look at the market, how the market's reacted to that in a minute. Now, just to bring this into context, okay, so 8.1% versus 7.7% expected. April HICP came in at 7.5%. March, 5.8%. February, 5.1%. And January, 5%. So we've seen a steady increase in inflation in the Eurozone. A year ago, 1 year ago, say June, it's actually June 2021, inflation was at 2%. So you can see why the market is transfixed and extremely worried about this. You know, it is one of the things. In fact, Biden and Joe Biden and Jerome Powell, you know, the head of the Fed chair, are meeting today at the White House to discuss the tackling of inflation, because inflation generally is gripping and concerning the markets. And we can see the impact in a minute. I'll show you. So yeah, it is a big thing. I asked this question: are we being too afraid? My answer to that is not really. I don't think. In my personal opinion, I don't think we are being too afraid from inflation, because as I just pointed out, a year ago in the Eurozone, inflation was at 2%. UK, okay, just give you another example. UK's inflation at the moment is 9.1%. June last year was 2.1%. So there is a huge increase. So this clearly is playing on the markets. But I think the big question will be how the job market holds up to this. That's the question, because we do have a robust labor market in both in the globe. We do have a reasonably good job market. So we'll talk about that later, because obviously that's coming up on Friday. So yeah, that's a big thing. So I do think the markets are not too afraid. I think they choose certain days to ignore it and some days not to. Remember last week, don't forget last week, the stock market had its best end of the week since November 2020. So again, and I on my program, anybody who watched me last week, I did say, you know, are we ignoring inflation? And I just say, no, inflation is not going away. It's not going away. But anyway, let's have a quick look how the market reacted to that 8.1% percentage from the Eurozone inflation report. Let's have a quick look. Let's start off with the Euro. I'll bring it up to share it with you. Okay, there we go. See that? This is when that inflation report came out. Okay, and the Euro dropped around that time that report came out. It was trading at 1.07335, and it crashed. It had a little bit of safety around that support we had watched many times before, 107016. But currently, as the market stands, it's currently trading 1.06921. So yes, no, the market is scared of inflation, and I think it should be. I think this is going to be this is a thing. So that is how that reacted. The cable again came under pressure, but not so dramatic. What we're seeing with the cable, though, is dollar strength. Dollar strength. Okay, because obviously when things are a little bit nerve-wracking, the money goes into safe havens, and the greenback is a safe haven. So we're seeing dollar strength against the cable. Still trading above the 200 moving average. So that's a level to keep an eye on. RSI is slightly under 30, but I don't think it's dramatically under 30 to give a hint that it's oversold. But a key level now, we're trading at 125.73. And don't forget, the cable, the British pound dropped against the dollar when the CPI for the UK came out a couple of weeks ago. Keeping an eye on this level here, though, still at 125.49 as an area of interest. So that's what we have with that. Let's have a look at, say, the other things, because let's have a look at the S&P 500, see how that is reacting. Okay, well, okay, we're currently trading around 4,138 points. Okay, slightly down, but not dramatically down. We're under the 50-day, we're still above the 100 and 200 moving average, though. Don't forget the US was closed yesterday for Memorial Day. So it'd be interesting to see how the US reacts in about 15 minutes when it opens up. Interesting to see that. Let's have a look at tech. NASDAQ, again, pretty much very muted, still around the 12,657 points. Let's see how that reacts with this inflation report, with the oil story when it opens up. And plus, if we get any developments from that Biden-Powell meeting at the White House to see if they make any statements, that will be interesting to see, especially with the US session, how that reacts there. So yeah, that's where it stands. My old favorite gold, we'll have a quick look at it. It's not changing. It's still range bound. I mean, if that starts to skyrocket or starts getting real attention and really becomes a safe haven, that's when the market really starts getting frightened, or potentially gets really frightened. As it stands, it's still ranging between 1,865 level, which we've been watching for many programs now, and that support of 1,834 and 87 cents. So yeah, still range bound. So that's what we're looking at the moment. So we're looking at slightly, looking at a euro under pressure, especially after that shocking inflation report. But we are then looking at strong dollar against the other majors, such as the British pound. So that's how the market is reacting currently as it stands. European indices, the FTSE trading slightly higher, 0.18% higher. DAX minus 1.10% lower, and Eurostoxx is minus 1.21% higher. So again, they paid more attention to the inflation. Again, not scarily low, but still, slightly negative as the US session is about to begin. Now, don't forget, we've got these big events coming up. The rest of the week, US ISM manufacturing PMI, which we'll keep an eye on. US ADP employment change. Then the big one on Friday, which is the NFP average earnings and US unemployment. Now, I think, like I say, yeah, inflation is a massive deal at the moment. I always said that. I said that last week when the market seemed to forget about it a little bit. I think inflation is a big thing. But I think the labor market, if we start seeing the labor market really start to fall, then that could be a real big negative impact on the market. Average earnings as well. I'd be interested to see what that comes in. If we can see an increase in average earnings, that obviously could see the market say, well, can it help us out with inflation and things of that nature? So yeah, that's how it stands. And I will be doing a watch along on that. Don't forget, a watch along at the US NFP and average earnings this Friday. So please come and watch it with me. And hopefully we'll watch it together and see how the market and how it impacts the market live, very, at that moment in time. So don't forget, this Friday, I will be doing a watch along to watch the NFP, average earnings, and US unemployment. I'll be back online again tomorrow, or back on air tomorrow again. Don't forget, 8 a.m. UTC for the European session, which I'll also do a recap if anything happened in the US. Then at 1 p.m. UTC, we'll be back on again to talk to you fine people, again, talking about what's happened in Europe and what we could potentially look out for in the US session and any other developing stories. So please feel free to join me whenever you wish. If you ever have a question, please feel free to ask me while I'm online. And this is what I'm here for. And yeah, that's it. Please do. There's no questions at the moment. So not a problem. So yeah, please feel free whenever I'm online. Now, if you're watching me on Facebook, by all means, follow if you've enjoyed this episode. If you watched me on YouTube or watch me on YouTube, subscribe if you like. Click the notification button so you know the next time I'm going live. If you've enjoyed this episode and found it insightful, you enjoyed it, give me one of those if you like. Put a smile on my face. But anyway, till next time or till tomorrow morning, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.